welcome to the Futures Edge podcast. I'm Jim Muriel. Today we have Mitch Rochelle, who's a founding partner of Macro Trend Advisors, visiting research fellow at San Diego School of Business, and the co-host of the NOPO podcast. You're going to have to explain why it's called the NOPO podcast first.
You want me to start with that? Well, thanks, Jim, for having me. So one of my it's interesting. It's a typical, and I don't know when you guys started your podcast. Maybe my research team should have done more research, but the reality is it was a COVID project. A friend of mine, Vera Gibbons, for 5 years published something called the NOPO newsletter. It came out every morning at like 7 o'clock in the morning. And it was all just silly stories in the news cycle that had nothing to do with politics. That's what NOPO stands for. And I was actually, it's ironic that I was doing this because yesterday I drove with my son back from Michigan. He graduated from University of Michigan, but I was actually driving a car out to him in the middle of COVID, I don't know, a year and a half ago, whatever it was. And I was for a 9-hour ride, I just loaded up my phone with calls, and one of them was with Vera. And we were just BSing, and we said, let's turn the newsletter into a podcast. So that's what it is.
Love it.
We started doing stories. Vera's actually on hiatus, and I have a Nader, your producer there, who's a longtime radio guy who, was first the guy that, was just a face on Zoom, John Iannuzzi, and he turned into being my co-host. And we have guests on. You guys are welcome. We talk about anything as long as it's not political. And what we found is, in this day and age, people want a place that they can go for whatever it is, entertainment, news, nonsense, just knowing that it's not going to be political.
What's not political now? When I say on Twitter, I'll say, the lockdowns were stupid and caused more problems than they're worth. And people are like, why do you have to be so political? Who makes that a political statement? It's just what I think is logical. And everybody says everything is political. So my question to you is, if other people were listening to your podcast, would they say it's not political? Is it just about like entertainment stuff?
It's about, so I'll go backwards in terms of episodes. And it's a great point. Last week we had Jared Kafley, who started a company out in Arizona called Pristine Auctions. They auction 1 million items a year. I'm doing a free commercial for you, Jared, but they auction 1 million items, sports memorabilia mostly. And it's a 0-10. They started in 2010, and now they do 1 million items a year. I just thought it was fascinating that like a dude in his garage literally started a business in his garage, and now they're doing 1 million auction items a year. So just talking to him about the growth of his business, our fascination with collectible, it's just something. And my host in that episode, co-host John, we were joking about license plates. Like, we'll chit chat for 20, the whole thing's about a half an hour. We'll chit chat for 10 of the minutes up front, and then for 20, we'll put the guest in. And we were talking about license plates. And John told a story about how in the state of Rhode Island, they let people vote on what the new license plate would be. And more people turned out for the vote of the license plate than turned out for the presidential election. And I said, you know what? Wow. I was going to say something, but we're just not going to. So that's the kind of thing where you Jim, where the line is of politics, and you just kind of stay away. Right?
I just meant that my line was different than some others. And that wow from the background was co-host, executive producer in the show, and really the brains behind the operation, Bobby Iacchino. Bobby, should I ask him the normal established credibility questions that we do?
We need the credibility, or we can't.
We need the credibility. Now, I want Bobby, you to bet on the answers that he's going to say. So
let me go on. Let me go on DraftKings right now and place a bet because I'm in New York State and I can bet right now in New York State.
Okay, the 3 questions are going to be dogs or cats, favorite movie, and why is it Office Space, and best a TV show you've seen over the last 2 years. First, dogs or cats?
Dogs.
I'm betting dogs.
Dogs.
Yeah.
I had dogs too. Yeah, for sure. Okay, best TV show you've seen over the last 2 years. And it can't be anything highbrow. We're going to end this right here.
No, I think I'm going to say, and we have one episode left, The Winning Time on HBO, about the rise of the Lakers when Jerry Buss took over the Lakers.
I want to watch that.
So many more people would say that have. I've heard so much about that. I haven't seen
It's great. It's great.
And it was better than the Bulls one?
The Bulls one was more of a documentary. This is not a documentary. This is, I'll call it a docudrama. And it's well acted. And you'd recognize a lot of the actors and you'll realize how good they are because they've done other things. And the story and the people who play Magic, the guy who plays Bird, the guy who plays Kareem, the actor has Magic Johnson's smile. I mean, so it's really good. It's good.
Okay, I'm in. I just wrote that down. Good. Okay, let's get to the meat of this. So you wrote me a note today about the.
By the way, you said something about
movies.
Pulp.
I forgot movies.
It's a tie between Pulp Fiction.
Love it.
And the reason why I say Godfather, you can't just say Godfather 1. So it's got to be Godfather 1 and 2 together. But Godfather 3 was such a piece of incurable crap that you got to say Godfather 1, Godfather 2 tied.
My daughter and her friends are obsessed with the Godfather movie. I watched it with her and she thought it was brilliant. And a lot of times those movies don't jump the generational gap from 40 years, and they love it. The Godfather is a fabulous movie. I agree.
A couple of comments on that. I personally think Inglourious Bastards is slightly better than Pulp Fiction. I've loved Pulp Fiction forever.
Right.
I think that's sort of similar to Godfather 1 and 2 for me. But I think if you pick Godfather 1 and 2 almost as one, and I agree with you on that, that's like me and you fighting Jimmy. We probably win. So I got
but you're not going to want to do it again.
But by the way, all I'm going to say, Bobby, is I can see you kind of from the waist up, and I can catch a little bit of your ink-laden bicep. I don't think you need my help to beat the hell out of Jimmy. All right,
Jimmy's scrappy.
Bobby,
we just talked about this week.
There's bad blood between us for some events this week that we can't go into, but we are a little mad at each other, just to be clear.
Fair enough.
But anyway, okay, good. I will say Inglourious Bastards was great. Pulp Fiction was great. I think you passed all those tests with flying colors. Now back onto your note that you sent. I wanted to jump from the 9th floor of my office here. It sounded like you think we're in a tailspin that we can't come out of. So let's first hit the inflation part of it all. First of all, I do, like, we had one guest on who said, what's the point of pointing to the reasons of inflation? What's the point? The point is that historically speaking, you need to figure out what causes inflation so you don't repeat it again. And I don't want any jackasses rewriting history and start saying it's Vladimir Putin. So let's go over the causes of inflation in order. What are your thoughts?
Well, can I just touch, because the president's in Korea now, and he gave a speech where he blamed inflation on Putin. If I was a Saturday Night Live writer, and I'm not, I would take, and Jim, you're from Chicago, so I would take the old the Bears. I would do that skit today, and I'd put a whole bunch of like economists in a room, but all of them look like Biden, and they would say anything, and they would say, Putin, like it would be the answer to everything. Like, why is diesel $9? Putin. Like, why is there no baby formula? Putin. Why can't I get my electric vehicle? Why can't I get my dishwasher? Putin. Like it's preposterous. All right. So if you asked me, I'm not telling you how to ask questions, but if you asked me in one word, why do I think inflation is really, really bad? My one word is diesel. Because if you think about, and by the way, I'll do this quick. Yesterday, I was on the phone with one of my neighbors in Florida who texted me something about inflation. And 17 minutes later, I said, Billy, I got to go. Right. So I'm not going to do 17 minutes on it. But I think that we have producer prices running double digits, right? 10+% year over year increase in producer prices. We have consumer prices running 8% year over year. So that's like dangerously close to 10% year over year. Producer prices are a leading indicator of consumer prices. But if you unpack all of it and you stop doing the stupidity of pulling out food and energy, like we can't live without food and energy and shelter. If you pull all of the stuff out, you realize that diesel is insidious to the supply chain, to everything, to have diesel running at the rate that it's running. And I'll give you a perfect example. I drove from Florida to Michigan for my son's graduation. My wife and I drove back from Michigan to our home in New York from originally. And then I just flew out to Michigan to help my son pack up and go back. That's a lot of rest stops stopping to get beef jerky and to clean bugs off of my windshield. But what I do is I talk to people in rest stops, and the number one thing that they're talking about is the price of diesel. Okay. So you have an owner operator that gets a fixed price for pulling the box behind his cab going from point A to point B. He can know, it could be a Shia, I met plenty of them too. They can't make money anymore, right? So what happens when we have a trucker shortage that screwed up our supply chain? Now that we have a trucker epidemic because they can't afford to do what they're doing. Not everybody gets paid by Walmart or Amazon or FedEx or UPS to drive. A lot of them are independent owner operators, which is the heart and soul of the trucking industry. They cannot afford to do their job. So they'll do one of two things. They'll either stop delivering the good, which means that we're going to have more inflation, or they're going to insist on more money for the delivery of the good, which means inflation. So until we can get the diesel part under control, now I will pause and give the administration credit for a second. They are putting pressure on the oil and gas industry, and the oil and gas industry is pivoting away from gasoline to refine more diesel to try to deal with that. But that doesn't matter. The demand exceeds supply. So we're still going to. So that's why I think inflation is so sticky that it'll be here for a while. And that's what's dragging down the economy.
Well, Bobby, I want you to know so much more about the oil market than I do or than anyone does, but I'm going to ask a quick question before I pass it over to you, Bob. So we were talking about this today on the radio show I did this morning too. We produce, 11.5 million barrels a day. We used to produce 13 million barrels a day. And that was, many of this is based on, and I don't know how much of it, I'm asking you. Leases being canceled, permits being canceled, pipelines being canceled, bills being talked about to limit access to the credit markets for fossil fuel companies. During the same week, by the way, that they called the fossil fuel companies a couple months back and said, hey, why you guys aren't producing more oil? So prior to this pivot that you said, well, they're now pressuring, they ran on disrupting fossil fuels. Why aren't they taking the credit they deserve, I guess is the question.
Well, listen, we have an administration that's at war with the internal combustion engine, right? That's their enemy isn't Putin. Their enemy is the internal combustion engine. And I've spoken to oil company executives in different places in the country to just get a feel for it. When there are people who are being nominated as potential Fed members, and they want to talk about policy to restrict access to credit if you basically create fossil fuels. I mean, how many signals did you need to give the oil and gas industry that you're not welcome in this country anymore? So they stopped investing. They just stopped investing, and they said, you know what? We'll deal with the inventory we have. We'll let other parts of the world do it. And the fracking industry, sadly, kind of needs a $70 barrel West Texas intermediary for it to make sense for them to do their job. And they're well over that now. But the problem is they had a spate of bankruptcies when that West Texas went from 70 to 40. And they're not willing to put up the credit. A lot of those things are funded friends and family, and friends and family got burned. All of those, master limited partnerships and stuff that do that. So you have the most unfriendly to the oil and gas industry that we've seen in our lifetime. And you're surprised that no one wants to put capital at risk in that industry? Like, it ain't Putin's fault. Like, that's for sure.
Bobby, is it Putin?
It's interesting. I liken this to saying that I'm going to fire my employee because I'm going to have a kid, and that kid eventually will grow up and be able to replace my employee.
Yeah,
that's sort of what the plan is from perspective of we want to become energy independent, but not with carbon-based fuels. We want to do it with renewables. Renewables are not ready on a cost basis, on an availability basis, or on a reliability basis to replace carbon. And that, I guess, is my biggest issue when you look at crude oil. By the way, my trade later on, Mitch, you don't really know this yet, but later on in the show, and you're welcome to stay on for this, Jim and I do trades. And my trade is I bought crude oil late today. So buying crude oil, I think we're going to see 150, probably 160. That's not where my target on this trade is, but I think we're easily going to see 550 as a national average, 459 as of today.
For unleaded.
Yeah, for regular.
Regular.
Right,
yeah.
For regular.
Jesus.
California is at 606 for regular. All right, as of today, according to AAA. From that perspective, when you look at refineries are now back to running at 95% capacity. If you know anything about the refinery industry, 95% is basically 100% because there's always some part of the refinery that needs maintenance or fixing or retooling or something. And we're not even fully, we're in the summer driving season, but the peak of it comes around early July, normally, late June, early July. So it's going to get worse. And I did a quick take thing for Bloomberg today where the subject was, is there going to be relief at the bump for the consumer coming up? And we're supposed to talk about a minute and a half, 2 minutes, or 60 seconds or less. And my answer was, is there going to be pain at the relief at the bump for the consumer? I want to just say no. Have a good day and send that as the recording. Because there's no, in my opinion, there's no confluence of factors that's going to reduce oil prices and then subsequently gasoline prices enough to make a difference to the consumer where they notice it and they feel that sort of weight off their shoulders.
Well, and the OPEC plus cartel, for lack of a better way to describe them.
Oh, that's the best way.
Right. They're in the catbird seat right now. Russia, to some degree, is in the catbird seat, although there's less and less countries that will consume. The Biden administration is having conversations with Maduro in Venezuela. Like what? Oh, geez. Like what? When we have Texas Gold, Texas Tea, whatever the Beverly Hillbillies call
Black Gold, Texas Tea.
Black Gold and Texas Tea. We got that in our own country. So, and interestingly enough, this is not my podcast. This is not the NOPO podcast. So I can say this. Where does it all come from? Swing states. So like, why in the world, if you were a politician, it's interesting. Donald Trump was not a politician. And I know him from the real estate business in New York for a very long time. He's, in some respects, he's got the charisma of a politician, but he's not a per se politician. He's not influenced by political outcomes. But the Biden administration, these are like lifelong politicians and bureaucrats. You know how important swing states are, whether it be for the midterms, whether it be for the general election. You're seeing what's going on in Pennsylvania right now, right? With, two Republicans, that are going to be fighting over hanging chads. Like, why in the world would you not? And if you're truly from Scranton, Joe, why in the world would you not go back to enriching your home state and let them do what they do? I drove to West Virginia. I was in Pennsylvania yesterday. I saw the price of kerosene. I was in Western Pennsylvania, and there was a kerosene pump in the gas station because I was in the heart of one of the Amish countries. And so they'll take the horse and buggy there to pick up kerosene because they use kerosene in their property. And I saw the price of kerosene, and I'm like, oh my! Like it's anything that is combustible is through the roof. Home heating oil. What is energy prices going to be to air condition your home this summer, right? Natural gas was high, but in some parts of the country, the winter wasn't so bad. It's going to be in the 90s potentially in New York this weekend. Like, what happens when people get their electric bill for the month of May and they see what it costs for Con Edison or whoever your public utility is in New York? So I think that this is a huge issue. And until this administration does what Gerald Ford, God bless him, Michigan grad, but what Gerald Ford did, he at least admitted that we had inflation in our country. Stupid buttons that said whip inflation now, but at least he admitted it. Okay. The Fed was calling it transitory up until when? 8 weeks ago?
No, up until the final appointments by the government, they were calling it transitory.
Yeah. And Janet Yellen, who ran the Fed, sitting there as Treasury Secretary, still talking in March about it being transitory. Like, so
yeah. And when they say
like this is we talk more about trading in markets, but I got to read something to you guys because I was listening to it at the gym today, and I honestly. anyone that has any experience in economics, whether it's as a strategist like myself or someone who's actually an actual economist, or I can't even believe this came out of somebody who is the director of the National Economic Council. Okay, this is Brian Deese. This is not Brian Deese. And this is not a political statement. I'm actually throwing this to you guys as a question. Okay, here's the quote. If we can continue the deficit reduction, then we will continue from a fiscal policy perspective to reduce price pressures in the economy. And one of the most sensible ways to reduce the deficit right now is to enact corporate tax reform that would level the playing field, and that would reduce incentives for corporations to drive production and profits overseas while increasing revenue to the federal government. How do we all know that level the playing field in terms of taxes means raising taxes, right? How does that, in what universe does that reduce the incentives for corporations to move stuff overseas?
Mitch, you take it first, because I got a lot of swear words so far.
What was your answer to Bloomberg? No.
No.
So I saw some of those tweets from the White House, from, the Vassar grad who works in the West Wing, who writes the tweets for Biden, talking about raising corporate taxes as being the solution. Let's just take the first piece, which is deficit reduction. The only reason why the rate of change of growth of our deficit has declined is because we're not doing $1.9 trillion stimulus bills anymore. Okay. So we haven't done anything to reduce the deficit. We've not meaningfully, right. The interesting thing is corporate tax receipts. This is Tax Foundation information, but corporate tax receipts in 20 were like the highest that they'd ever been. That's a result of the Tax Cuts and Jobs Act under the Trump administration. So Art Laffer, God bless him, said it. You lower taxes, you actually raise revenue. Okay. And just, just look at the Laffer curve. Okay. You cannot turn it upside down. It doesn't work. Profits overseas have less to do today about tax rates, although what's her name did run around the world yelling before COVID, trying to get consensus around minimum tax rates around the world or maximum tax rates around the world, whatever. So to normalize taxes, that doesn't work. But China wasn't a part of it. So can we stop talking about it? Because that's just idiotic. The second largest economy in the world is not going to participate in your game. So forget it. Fiscal policy that reduces spending, lower taxes, not higher taxes, more incentives to promote the supply side of the economy is the only thing we can do right now. The demand side of the economy can no longer be stimulated. And right now, it's being destroyed right now by higher prices. So we have demand destruction that we're seeing in oil and gas. We talked about that. We're going to see more demand destruction amongst the consumer. You saw the retail earnings this week that sucked. The guidance from retailers sucked. So we have to fix the supply side of the economy. I'll go back to what I said about diesel. That's a big problem with the supply side of the economy. There's nobody in the West Wing, nobody that understands that this is a supply side issue and not a demand side issue. And the fair share comment, like this broken record bullshit. Okay. This first time I've cursed on somebody's podcast. You guys should be.
We welcome it. We were hoping you would curse at least more than you have so far.
I'm a native New Yorker, but there's these stupid sound bites, right? Pay your fair share. There's no basis in fact for that. And I don't know if you guys, I'll give another podcaster a shout out. Ben Shapiro, Daily Wire, has got like this 10-minute thing in his Debunked series where he gives the absolute truth about who pays their fair share of taxes, something I've been talking about on Fox Business for 10 years. I mean, the reality is corporations are more than paying their fair share. So you can't tax them more and think you're going to fix the supply side of the economy. That just makes no sense.
So when you mentioned the apology tour and the let's all coordinate our tax rates, it really underscores like how they hate competition because they hate winners and losers. And guys like us know that the only way this whole thing works is through competition. I imagine some of these other countries, when they said to them, you got to, let's all raise our tax rate together. They're like, you can go F yourself. I'm not going to raise. I mean, I want to beat you. And that's the whole thing about the states too. The states were supposed to compete with each other. I'm in a state that happens to do things really dumbly. Dumbly's not a word. You know what I mean? No, they do things poorly, and the states around them are supposed to benefit for that, and it's supposed to be self-regulating. They continually try to jump in and try to level the playing field. In this case, they're going to level the economy when they start going after corporations. It's the most asinine thing. Let's go to the. You go, Mitch.
Yeah, no, but let me say one thing real quickly about the world and the problem with that apology tour and the harmonization of tax policy is every one of the countries that Yellen was talking to has VAT, okay, or something that looks like it. They have an upwards of 20% consumption tax, a national consumption tax. Now that's to fuel a largely socialist type entitlement programs that they have in their country, but they have a VAT. VAT is the most regressive form of tax other than inflation known to the tax system. So you can't talk to them about changing their pie chart of how they take in tax if we don't have a VAT, right? So yeah, they're going to lower their corporate tax rate from whatever to whatever, or raise it from whatever to whatever, just to be globally fair. But at whose expense, right? Like we don't need a VAT in our country to make. And by the way, I'm a huge fan of consumption tax. Don't get me wrong. Like I think it's fair, but I could never see a progressive politician ever making a case for a regressive tax, right? So.
Right. Well, I'm all in the case. Like I want any tax cut at this point in time, even if it's pointless and mindless. Just I want the federal government to have less money. I keep trying to explain it to people on Twitter. It's like if I was on Congress and they wanted to just take $100 billion away from the federal government and burn it in the street, I would vote for that. I think it's a terrible of the different possibilities. That's the worst one. But I think they have too much money, and the corruption comes from too much money. Can we move to supply chain? I don't know if you guys saw the Craig Fuller thing, and I can't remember what organization he's from. Where it was on Zero Hedge too, and he talked about just being decades before the supply chain is going to heal itself. I agree that it's going to take longer than people think. Decades to me seemed a little bit nonsense. I think, like Warren Buffett says, and I think Warren Buffett's somewhat of a hypocrite, and I'm not a huge fan, but he talks about never bet against the American people. Decades seems like a long time. Thoughts?
So I'll say that the most powerful piece of accomplishment of the Trump administration, and again, I'm going to talk about policy and not politics and personalities, was the North American Free Trade Agreement, right? Gotten redone into USMCA, where we created a pathway for North America to basically be able to move goods and services across borders efficiently. I'm going to leave what's going across the border between Mexico and the United States aside for a second, but just from a commercial commerce perspective, USMCA was brilliant. Why are we making stuff in China when we can make it in North America? Like literally pharmaceuticals should be made from the southern tip of Mexico to Saskatchewan, and they should be able to flow back and forth. And we shouldn't have 80% of the active ingredients in antibiotics made in China. There's no reason for it, okay? And we saw that in April of 2020. We couldn't get a mask in this country. We couldn't get a rubber glove in this country. And we realized how dependent we were on that. I was on, I forgot whose show, and they were, maybe in Scott Shelby, I think it was Scott. And he was asking me about something. And I said, to me, it's very simple. We're all addicted to buying stuff online. Why not put country of origin online when you're buying something on Amazon or anyplace else, and make it have to be a certain font, and let people decide whether or not they want to pay more money for the crappy charging cable that doesn't work, that comes from China. I mean, this doesn't work. This was like $2. It doesn't work. Or, $6 for the one that came from Mexico, and it does work. okay, or Guatemala or Honduras. Like, boy, wouldn't that be a way to solve the crisis we have at our southern border if we actually had a pathway to create jobs in those countries, as opposed to them being made by, Uyghurs in a province in China, like, like some shoe companies do. Like, this is, to me, that's the solution to the supply chain. Put it on our continent, okay? And it can be done. Now, to the point the Zero Hedge guy talked about, it takes 3 to 5 years to build that factory and have it up and running. If you move it from Asia to Belize, okay? But start, okay?
Yeah.
Start.
Yeah. Time passes, right?
And you know who knows this? Tim Cook, because Apple's dependent upon China to buy phones, but they're not dependent upon China to make them. They found ways to, they didn't have any problem supplying their last release, okay, of phones. Okay, they know where to make them. And if you talk to people in the garment industry, they got out of making stuff in China a long time ago. Like Ralph Lauren makes less and less stuff in China, not because of wages, but because of IP theft.
Interesting.
So if Ralph Lauren figured out X number of years ago how to pivot and start making stuff in Bangladesh because there was less IP theft in Bangladesh, then like, why is corporate America like so damn slow? Start building the factory, right?
It's crazy. And we knew this, I where I live in the northwest suburbs is Motorola country. That's where they have their headquarters. Yeah. And even like 20 years ago, that you were not allowed, if you were in Motorola visiting China, to let your phone leave your person. You couldn't leave it in your hotel room for fear that
they would take it and figure it out.
Yeah. And it's amazing to me. And by the way, quick little side note, my restaurant that I have in the northwest suburbs too, a bunch of old guys come there for lunch like twice a year or something. And finally somebody asked them what they're celebrating. They're like, they were the guys who invented the cell phone. And I was like, that's pretty damn cool, isn't it? Yeah. Right. Yeah. Not the Dr. Martin Coop, whatever it is. He doesn't come anymore because he's like 95 years old, but all of his team still comes. But let's move on to equities real quick before we let you go. I can't take up all of you on Friday afternoon.
Yeah.
We saw a nasty bad day today. Friday is when we tape this. Is the 20% level, once it gives, where do you think this all ends? What has to happen fundamentally, or are you technical? How do you see it?
I think that you got to look at how we got into the asset bubble and how we get out. Okay. So if you look at, this isn't the question you asked, but I'm going someplace with it. If you look at most of the recessions that we've had in recent times, those recessions were caused by asset bubbles that bursted or bust or whatever. My English is as bad on a Friday afternoon as yours.
They get it.
They broke. No one's talking about the real asset bubble in our economy, in the global economy, which is bonds. If you have 17, 20, 15, whatever it is, $1 trillion of sovereign debt with a negative yield, if the US Treasury curve was as low as the short end of it was like an infinitesimal basis point yield, and the long end of the curve was like under 2, okay? And the Treasury curve moves up 75 or 100 basis points as it has, that's the bursting of an asset bubble. Because, hey, we all remember this: when yields go up, bond prices go down, and vice versa. So we have an asset bubble. Chairman Powell said something very, very important in his last presser, which is they were going to pay attention to market conditions. Oh, we're being taped, air quotes, market conditions, and they would adjust their strategy as appropriate. So let's remember how we got into this. We printed money forever. Since the financial crisis, we printed money. They tried to taper back bond purchases. The market didn't like it. Taper tantrum. On October 2nd, I think it was, I could be wrong, of 18, I was sitting next to Charles Payne in studio at Fox Business. And that was the day that Powell said, we're not net yet at neutral. And the market said, what are you talking about? And the market beat the ever living hell out of the Fed until the end of the year. And Christmas Eve was the worst sell-off in like the history of the market on very, very, very low volume. But so the market's speaking right now, and the market's sending a message to the Fed saying, we don't like this. We liked when you printed money. Start printing money. We like modern monetary theory. Okay. So I don't know how long this is going to go, but I think we're getting there. And I think the Fed's going to relax their tapering and send some sort of a signal to the market that we're paying attention. That's my guess. Okay. Technical, fundamental, I think it's political. If you want an answer to the question, you also have analysts talking about a 4 handle on the S&P 500 at the end of the year. But still, here's one thing, and maybe I'll leave you with this. If you were a CEO or a CFO of a Fortune 500 company or an S&P 500 company, more appropriate, and you were doing an earnings call, do you have a shred of incentive to do anything but be insanely pessimistic on the earnings call regarding the rest of the year? Because if you set the expectations so low, all you can do is beat expectations. Why are traders not understanding this? Like, it's amazing. Like, the market got the crap kicked out of it this week because Lowe's, Home Depot, Target, Walmart all gave disappointing guidance. What did you expect them to say? The market's down 15%. Their stock's in the toilet. All the cash they have is going to buy shares. Like, what do you think they're going to do? They're going to give crappy guidance, and the market sold off on bad guidance. Like, to me, that makes no sense. So I think the Fed's going to step in to avoid an asset bubble pop in fixed income. They're going to try to stabilize the fixed income markets. They're going to try to tighten credit spreads a little bit, and the market's going to kind of limp back. At some point, some guy like my friend Kenny Palcari or John Corpino, one of those guys on CNBC, or the Nigerians are going to say, today is capitulation day. But 20%, a bear market, like, that's pretty bad. And one last thing I'll give you, if the 10-year treasury is at 3-ish, all right, and that's probably where the free market people are pushing it, and the S&P 500 dividend yield is 2, why wouldn't you buy equities? Because, boy, the S&P 500 dividend yield sounds a lot better in terms of a total return perspective, okay? Even if the yield goes down over time because they're not increasing dividends. But to me, from a total return perspective, I like buying the 500 and reinvesting dividends way more than I'm going to buy a 10-year treasury, because I think the S&P 500 reinvesting dividends is going to beat the hell out of the 10-year treasury if I bought it at the 3 handle. And at maturity, I get what I paid for it, right? Like, it makes no sense to me. So
I agree with you on that. Bobby, before we let him leave, you got anything more for him?
Yeah, I think you're exposing how small our circle is, Mitch, because next week is John Najarian, and then on the 3rd is Kenny Polcari. So, we have a very small circle of.
You want Corpina's cell phone number?
Give me Corpina.
We need more Italians on the show. Yeah,
well, Corpina was Polcari's protege, so I'm supposed to play golf. I think Memorial Day weekend I'm playing golf with Corpina. Literally, he lives around the corner from Polcari used to, but he moved to Florida. And Kenny and I did a segment together on Charles's show. I think it was Payne's show, and we were both in Florida. And I messaged him afterwards saying, like, dude, why didn't we just do it in one of our living rooms? It would have been a lot easier. And Charles said, I think it was Payne. Charles was like, amen to that. Like, we should have done it.
Kenny's on the Atlantic side, not on the.
Kenny's in Palm Beach. Yeah.
Right.
In Palm Beach. Yeah.
I'm going to actually have to, next time you're down here, I'm going to buy you guys a drink somewhere in a swamp so we can meet halfway.
Yeah, we can buy cigarettes somewhere around Alligator Alley.
75 right there.
Yeah, exactly. All right, boys.
Guys, it's Friday afternoon. We got to talk about our trades. I got to get to happy hour at my bar. He's Mitch Rochelle, founding partner, Macro Trend Advisors, visiting research fellow, San Diego School of Business, and co-host of the No Po podcast, which stands for No Politics. Thanks, Mitch. It's been a ton of fun.
All right,
appreciate
it. See you again. Look forward to it. Thanks for having me. Bye-bye.
Bobby, he had a lot of negative shit. What do you think?
Yes, he did.
Yes, and I'm still negative the S&P. We broke through that 20. The only way I'm going to be positive of it, and I said this on the radio this morning and on Scott Challenger's show, if we go through that 20% level like we did today, I don't know where we closed because I started. Do you know where we closed, by the way, the S&Ps?
Right now, I'm looking at ES with a closing level of, hang on, I got it right here. Actually, let me give you the actual. I'm looking at one of my delayed charts here, but I've got my regular ones here. Keep talking. I'll find it for you. I'll let you know in a second.
So anyway, what I want to happen, and it can happen next week too, not to further those lows and bounce back and reject it and then come be above that negative 20%, because I think that that's a level of some significance, and not just because it's 20%, because it double bottomed there, hit it last week, hit it again today. Both times, the first time it hit it, it rejected it soundly. If we go through it, hang there a second and reject it again, to me, that'll be a sign that at least on the long short term, we are due for a bounce. I'm not calling the whole madness over, but does that sound legit to you? And where did it close? You got it yet or no?
So it does sound legit to me. And as I'm looking at the screen right now, I got the ES at
That's okay.
38.96.
Oh, say okay. It's 38.96 is a nice bounce in that last hour I missed when I came to do this
Yeah,
podcast,
it is.
which is fine.
Basically unchanged for the. I mean, it's not far from unchanged at all.
Okay, so that's a strong close. If we build on that strength on Monday, I will think either a short-term bounce is due, or again, when a short-term bounce could be the beginning of the end. A lot of times its job is to convince you that it's the beginning of the end before it rips your face off and then pummels you like it sometimes does. What's your base case?
So here's my thing with the S&P, and I said this as well. We do have a double bottom on the S&P now, purely technically. We had Mike Arnold on a couple of weeks ago, and he's my business partner, and he's got a set of rules for doubles. So while that double could rally back up to what would be the peak on the ES, which would be right around 40.95, okay, for us, we have to get a close above it for it to be a reversal. Now, as you mentioned, if it then goes back down, it becomes a triple bottom. It doesn't even have to sit there. And triple bottoms are continuation patterns, mean continuing down. Double bottoms are reversal patterns, means it reverses back up. So that's what I'm looking at on that. It's been my stance, and I said it on, I have 4 TV interviews this week, and all 4 of them I said the same thing. Do we think that the S&P and the Dow are going to get pulled down into bear market territory to join the Russell and the NASDAQ? Or do we think the S&P and the Dow are strong enough to pull the NASDAQ and the Russell up and let the whole market recover? I suspect, and maybe not now, but I suspect both of those indices, the Dow and the S&P, will close in the bear market territory, which we're close to happening today. But we got this late day rally. By the way, it's Friday the 20th, just so everybody knows. And we got the late day rally, which allowed us to close down 19% instead of 20%. So it was almost a 1.5% rally off the close. But I suspect both of those indices are going to close. From a perspective of what you said, I absolutely agree. Because if it comes down the third time, and I expect it to, I'm looking really for a medium-term bounce here. But that down the third time is going to be really ugly.
Okay, so let's move on to 10-year. We talked about treasury yields quite a bit. My trade is okay. The two trades I had on last time, both of them were losers. It was a bad week. Whatever. Let's throw that away and we move on. So this one is mostly technical because I do believe the 10-year yields are eventually going up to 3.5%. I don't see a whole lot more than that, but we were above 3% for a week or so. We came back down. We traded about 283 when I was looking at it. My trade is to sell the Micro May 10-year yield contract, CME product, sell it at 283 with a target at 2.5, 2.5 on the downside, and stop at 310. So we've got to go back above 3%, big psychological number, and stop out there. That would make $330, lose 250 if you're stopped at your level. But in this trade too, if it goes below 275, I plan on adding to that as well, adding to a winner, not a loser, which, by the way, everyone says you never add to a loser. I've added to losers before. Sometimes it works out. There's never any really hard and fast rule, but adding to a winner is a lot better. I'll give you that. Do you think we could see a pullback in yields, a rally in bonds in the next week or so?
Yes. And the reason I say that, my long-term target for the 10-year, which would be the end of this year, is about 375. But having said that, the ebb and flow of this is pointing toward 250 for me. And the reason I say that is because the recession narrative is starting to take hold. And with the recession narrative, this is my whole thesis for the Fed is I think you're going to get 2 more 50s and they're going to stop. And they're going to say, we now need the supply chain to do the rest of the work for us. And now they can also blame Putin and everybody else. But they're going to say, we've done what we can. And that, I think, is when the recession narrative is really going to take hold, because now we got rates, the short end, 150 basis points higher. You're going to get yield curve inversions, and you're going to get the recession to take hold. I suspect they'll have to go back to tightening again at some point. But this particular trade, I think, is going to work.
Okay, let's get to your trade. What are you trading, crude?
Well, I want to point out that my silver trade worked last week. And I think I said on the show, and this is why I want to point it out, is that I was scared to death of this trade. Now, I had my stop. It was a little bit more risk per contract than I would normally take. I allowed myself that because I had nothing else on. Again, that's not the best rule to put into effect, but I had nothing else on. So I allowed it to, and it worked. And I want to say that I got rewarded for bad behavior, and you should never do that. That's number one. Number two, as we talked about with Mitch, I thought Mitch was spot on basically everything he said. I'm going long crude oil here. I bought crude oil at 109.60. I have to look at where it settled. I didn't see where it settled, but you have to do this in micro because it's a very large trade. If you were doing this trade on the standard crude oil, you'd be risking $7,000. I'm risking $701. My stop's at 102.59 in the micro. And my target is going to be 123.70. So this leaves you, this is about 2-to-1 reward to risk. It's actually higher 2-to-1, higher than 2-to-1 reward to risk. And I actually think we're going past the highs of 130.50, but I'm not going to take advantage of that on this trade. I could potentially take part of the trade off because I'm going to do more than one micro here. But I think this is going to be that breakout to the upside next week that I've been waiting for quite a while.
See, and like 2 weeks ago, last week, I kept saying that if it trades above 108, I thought it was going to 130. I still think that technically. Here's the part that I have a hard time with. I do think the Fed is genuinely terrified of inflation. I think the rhetoric isn't going to stop quickly. That could change, obviously, if the S&P is down 30% all of a sudden. But I think that if they plan on destroying demand, like Mitch said, they pivoted. Again, I'm going with you on this trade is emotionally because I think technically it looks perfect. But fundamentally, I can't come up with the reason for it. Which, by the way, as we've said on the show a ton of times, I do the fundamental part of it for me is not nearly as important as price. Price wins out from 70% technical trade to 30% fundamental. I don't like the fundamentals, but I do like the technicals. And you're going to hate my trade next if you like crude going higher. Although the Canadian dollar and crude aren't as correlated as they have been.
They're only about 70. They're 0.79.
Yeah,
so
and historically they've been more so than that. Correct?
Yeah.
So in Canada, and I do have this next trade on, and I got on at a good level, and I've taken some of it up, but I'm still short Canadian dollar. But here it is. And we're going to talk about the reasons why. It's selling the micro June Canadian dollar at 0.7790, targeting 0.7650. Setting a stop above at 0.7850. So that would make $140 per one lot micro if you get to your target, and it is losing $60 if you're stopped out at your level. To me, this was, Canada had rallied a little bit in the last few days, which I thought was great. It looked like a relief rally to me, but the resumption to me, is the fact that the Fed is more serious, it seems like, than most of the other central banks are. I kind of hope, because still crude has some correlation, and Canada still has some correlation, although it's broken down a bit. So if the technical rationale didn't work very well, if crude has a pullback too, that could fuel this trade. And which, by the way, your trade is pretty wide. So my trade could work and your trade could work. My trade is a little more short term. Thoughts?
Well, that's actually what I was going to point out about this particular trade, because you're right, I hate it. But the reason I hate it more is, so I mentioned the silver trade last week. I hated it fundamentally, but the technicals told me to do that trade, and I did it, and I hated it, and I did it anyway. It's like taking castor oil back in the day. I hated taking it, but my mom made me, and it worked. This particular trade over the last 2 days on the Canadian dollar, we closed above a particular tool that we use, that Mike and I use, called the rotation zone. And then we pulled back to the rotation zone and didn't break back in it. That says to me that we're likely to rally on Monday, but the two trades, because I'd like this, and I've said this a million times, I've probably got a week to 10 days in this trade, you might have 2 days in that trade. So it could actually go down and not disqualifying a crude oil trade at all. That's what I'm hoping happens. We're in a little bit of a fight, but I still don't want you to lose money.
I appreciate that. Thank you, my brother. What else do we got to talk about today? There's 50 minutes along. There's people who are watching this now about to tune out.
Yeah, no, that's about it. I mean, the only thing, again, I wanted to say was we try not to be political in this podcast, but when you hear things in the political realm that just defy economics and active investing and that just don't make any sense, we want to point it out. And I promise anybody who's watching, if it was the other side saying it, we would point that out too. And
Amen.
if anyone
to
wants
that.
to point something out that we're missing, I'd love to hear it.
Yeah, I love that. And just because, and I tried to point this out with Mitch too, like we can have opinions about policy, and just because a crowd of people are pointing at us and saying you're being political, shut the hell up. We're talking about policy. It's what we do. We're macro guys along with technical traders. We can do this. And I'm not gonna shut up. I mean, I've been silenced before, and that's why I can take a punch. That's why my nose looks like it does, because I talk when I should be shutting up. But
well, next time I see you face to face, I'll try to avoid your nose. How's that?
Good. Yeah. So anyway, we joke on the end of this show how it's like a Zoom call is like, when you're, you're 15 years old and you're talking to your girlfriend and she's like, you hang up. No, you hang up. No, you hang. So I always just hang up first if I can figure out how to do it. I didn't do it right again, did I?
You screwed up again. I'll show you how to do it.